much. Our next guest says that as an equity and debt play, it is a good time to be in the financial space. James Frischling is NewOak Capital co-founder and president. They've got over $100 billion in assets under management. Spending the last hour with me. Why do you say that?
I'm sorry,
you're definitely, yeah. Why financials?
Why
financials?
I think Mr. Bernanke himself today coming out with the low rate environment he's going to maintain, I think it's a very good time to be in the bank space. It's a good time to be a bank. It's a good time to be lending.
Now, you know, the financials kind of gave us a nice run up over the last year or so. So a lot of folks, many analysts have come onto our shows here and said, well, watch out, you're going to get a pullback in the financials. Yet that sector overall, from a stock perspective, has been nice over the last few weeks. You think that continues for the rest of the year?
I mean, the majority of the banks we look at are still trading at a discount to their book. So while we've seen a tremendous performance over the last year, again, in our opinion, we're not going to go back to where we were in terms of the euphoria around 2006 and 2007, where I think most of these large banks hit their highs. But the fact is they're still trading at discounts, and we believe there's still room for them to go.
Do you think that we're getting kind of a big migration out of the fixed income space overall? I mean, if you've got rates this low, if you're sitting on a money market account or a CD, you're crying into your soup every evening because of the returns you're getting, or not getting, I should say.
I mean, a lot of the banks that we look at are still looking for capital. There's a lot of money that's interested in being deployed in that space. And as their capital positions become stronger, I think they'll be able to start lightening up on some of these assets. And by all means, holding the assets, which many of these banks has done, has proven to be not a bad strategy considering where debt levels are trading today, which is far better than where they were a year ago.
That's true. So you like financials, but you also like commercial real estate. That's a hotbed of activity right now and debate. Some say that commercial real estate is going to fall apart. Others say there's room for opportunity. What do you say?
Again, I think the devil is in the details, and we're not making a blanket statement that all commercial real estate is a good opportunity. But there's been so much origination and so much securitization that if you start sifting through the piles, our conviction is there's good, there's bad, there's ugly, and we think we can help clients identify the good.
You also like technology, and then you like shipping containers and aircraft. Talk about the last two sector picks you have here.
Well, just that they're, I think, a little more off the run and a little more, I dare say, and I don't want to insult any of those industries, but I'm going to use the word esoteric. And with that in mind, a number of the more commoditized plays have certainly rallied, and we think there is room for some of these more off-the-run assets like transportation, like aircraft, like containers to move a little further.
Well, shipping containers, what about railroads? I mean, some believe, the Warren Buffetts of the world believe, Mr. Warren Buffett himself likes the railroad sector. Do you agree with him?
Well, I wouldn't dare stand on your program and challenge Mr. Buffett. So,
neither would I. But
so I'm fine with that.
You like the railroads as well?
Sure.
Okay. You know, there's a lot of talk about this, this Dow 11,000 today. We may hit it. Anything's possible in the last hour of trading on Fox Business. So if we do hit 11,000, do you look at that as a big psychological move for us? Or are you in the camp that goes, it's nice, but let's move on, and what else do we have going on?
I guess I would say cautiously optimistic. Nothing seems to be stopping the equity markets from rallying. A smart equity friend of mine reminds me that the equity markets tend to move in the direction that causes the most pain. And with that in mind right now, with most of Americans having missed this rally, with the shorts still getting squeezed, with earnings being very attractive, and again, the low rates, hard for us to bet against right now the stock market.
Don't fight the tape is what you're telling me.
We'll go with that.
I've heard that one as well. All right, you're going to be with me for the last hour. Greece is finally getting word of a backup bailout plan, believe it or not. France and Germany both backing a Eurozone and IMF plan to bail out Greece and other troubled members of the Eurozone if necessary. What took so long, and will this give investors more confidence in our markets? Robert Gray, will it?
Well, what took so long? I mean, Greece hasn't, officially, formally asked for it yet. And Germany and France, despite the fact that some of their biggest banks are, in quite deep in Greece, are really reluctant to bail them out without seeing, Greece taking some austere measures as far as their economy goes, and which Greece seems willing to do, although they're facing a lot of civil unrest, as they're trying to implement these measures. But they want to make sure that, Greece isn't just going to take the money and be a spendthrift with it. So they're making sure the measures were strict enough. And, it's posturing as much as anything, Cheryl. We all knew that this resolution was going to come because they couldn't leave their own banks out to dry as far as that goes, but it was just going to take time.
And Adam, he's making a great point. They didn't ask for it. Over and over, you heard the Greek president say, well, we don't need it. We're not asking for anyone's help right now. I mean, the pride was there.
Yeah, right, they didn't ask for it. It's kind of like that scene in Casablanca. I'm shocked to find gambling in this establishment. You're winning, sir. You want to know what took so long? Portugal took so long. They got downgraded yesterday. And the Germans know that if you're going to have, and the French as well, if you're going to have a unified currency, when your big export market includes, Germany exports to Greece, they need to be healthy. That's what took so long.
James, you surprised by this move by the Eurozone and the IMF?
I like the inclusion of the IMF here. I almost see them as a referee. They have far more experience, no disrespect to the European nations involved, but this is the most strained the euro has been since its 10-year history. So I actually think, despite those in the union suggesting they handled this problem on their own, I actually kind of like the idea of the IMF coming in. I don't think they're going to give the money easily by any means, but it's nice to see that there is, let's say, an experienced player in this type of situation, or even this type of crisis to come to get involved.
The French are being polite, but not that polite, is what you're saying.
I think that's fair.
That's very fair to the French. All right, well, we're going to take a break. When we come back, well, I want to find out what everybody's watching right now. James, going to start with you.
Thanks very much. I think we are continuing to believe that rates will stay low, as Mr. Bernanke had talked about today. I think the big report will be next week, which will be the jobs report. And while we've kind of seen this a little bit as a jobless recovery, I think there's the feeling that next week we might actually see some pretty good numbers. I'll also say with the markets approaching these 11,000 levels or more attractive levels, I know it's putting quite a few people in a better mood. Even if you kind of missed it, you're certainly feeling better that we're way beyond from the abyss. And I think if the job report comes back positive next week, you should see more consumer, I think, a little bit better sentiment.
Yeah, anything helps. Anything helps. You're right. Robert Gray, what are you watching, sir?
Well, looking at the Dow, still 3,300 points below the all-time highs, but one of the components in there is at a record high. I'm talking about Mickey D's. McDonald's at a record high in today's trading session. It's up about 1/2%, but in some rare air, if you will, on the charts there, Cheryl. Never before seen levels for McDonald's.
Mickey D's. Well, was it a buck for half the menu? Adam, what are you looking at, sir?
Caterpillar. You remember back in 2008, maybe you don't, they were predicting that their sales in China would actually double. They would hit $4 billion by 2010. So even all this saber rattling going on between the United States and China and different players, Caterpillar stock doing very well the past couple of days. Keep an eye on this one.
Despite the worries about healthcare and the cost of healthcare for Caterpillar, Adam.
Yeah, well, despite, because they actually just set aside $100 million bringing that on. So they're preparing for it.
The shareholders are going, but what about us? Anyway.
Shareholders, a lot of places are going about, what about us?
That's true. Very well. All right, guys, thanks to all of you. We've got to, let's get everyone's take on this whole relationship between the U.S. and China. It's a big one, obviously, but can our economy here afford to have American companies in some type of showdown with, frankly, the fastest growing economy in the world, and that is China, Adam?
Well, a trade war wouldn't be good in any respect. But there was an expert on Varney & Company yesterday who said it would be far worse for China than it would be for the United States. But we should avoid it.
Well, Robert, I mean, here's the thing. At what point is enough enough? I mean, Google's putting their foot down, GoDaddy putting their foot down for different reasons. But maybe other companies are thinking to themselves, how much do I want a government to restrict my activity, my business activity?
Yeah, you're absolutely right, and that is something they're going to be all concerned about. Adam, touching on a point that many traders, investors I've been talking to saying similar things. I mean, obviously, we need China to be they're a big buyer of our debt, and a lot of people saying they're not participating as much. Past couple of auctions didn't go off very well for U.S. Treasuries. Nonetheless, China needs us, of course, as the consumers of a lot of their products, and they are working closely with a lot of U.S. firms, both there and here. So it's a very intricate relationship there, and I think a lot of it's going to be posturing, and it's just going to take some time. China not going to open things up anytime soon. So I want to see exactly where Google's going to go with this. James
Frischling, I mean, this is a fascinating topic from any investor's standpoint because China is such a big market for us to dive into if we want to, but.
And I think this is, at present, very internet-focused. And with that in mind, I think the decisions are being made, censorship of the internet by the Chinese government versus testing whether or not some of these companies, like a Google, clearly like a GoDaddy, would be pulling out. But I prefer to see U.S. companies kind of band together, work through trade reps, and approach it that way. But right now, we have a few, I guess, domestic champions. And maybe these guys will do just fine, Google and GoDaddy, as a result of acting this way.
We'll see what happens. All right, guys. Want to take a look at James Frischling? Thank you very much. What are you watching, sir?
Well,
Words.
I'll just say taking some money off the table is not a bad thing right now, given that you never go broke taking a profit. And lastly, I heard several people say Greece is the word, but for 2010, it's deficit. That talks about Greece, that talks about the Euro region, and that unfortunately talks about the U.S. as well.
Thank you for not including the puns of Greece and Euro. I mean, there's no more. Greek tragedy. Can we hear that one more time?
Let's just go Greece is the word.
Yeah, Greece is the word. All right, thank you. Portugal could be the word also, James.
That's part of it.
All right, thank you for joining me for the hour.
Thank you very much.
Appreciate it, sir. Well, that is it.